Now moving on to vol. So realized vol, obviously, we all know it's gone up. 20% up in a week, you're going to get a spike in realized. So you can see here, we popped from about 15 realized into the 40s, 47 on 10-day for Bitcoin. ETH went from 25 up to around 56 here. So nice big shift of 30 odd points in realized. Implied vols also spiked. You can see here, they spiked, but they faded back down a bit. Spiked, faded back down a bit, right? So found a bit of stability around these resistance levels. So we probably saw highs in the implied vol on Saturday when it was breaking out, as there was a bit of a mad panic to get some calls on the board. And then now that's kind of sat there and has bled back down. So implied vols tend to kind of gravitate back down. Now you look at the carry numbers, they are still positive in the territory of around 15 vol points. So still, in theory, some juice to harvest here in being short gamma, but it takes a brave soul to sell a load of gamma on an asset that just did 20% in a matter of days, right? So I'm not recommending you go out and sell loads of gamma. Kind of everything depends on your own risk appetite and stuff. There is some positive carry here, but it's nowhere near what it was. It's about half of what it was. So just kind of be careful. As we're saying, the scenarios are opening up a bit for some bigger moves going forward. So kind of be careful how you play this one, okay? Now, implied vols were slower to react initially, especially in ETH. So we saw that big spike higher, but vols were kind of a bit well-behaved. And then suddenly, after expiry on Friday, as dealers got a little bit shorter because they had some longs for last Friday expiry, then the vol really caught a bid as there was a bit of gamma squeeze going on as calls got bought and dealers just didn't have the inventory to be able to supply it, basically. Okay, and that's kind of in terms of if you do want to sell gamma because you think vols, there's some juice to harvest here and vols are elevated, then I think March, June calendars are probably your safest bet rather than just selling a load of outright short dated front end, right? That can always be a bit dangerous, and certainly in what the market's doing at the moment. Okay, moving on to term structure. So no surprise to hear that those flipped into inverted, but they didn't stay there for long. So all these term structures, if you looked at them on Saturday afternoon, they were pretty inverted. Now they're pretty close to flat. So you see flat lines basically in both Bitcoin and Ethereum as they've started to mean revert and fade back down, as we often see. Looking at the Ethereum Bitcoin spread, we've got about 10 vols in the front, not far off that, about 10 to 12 vols across the whole curve. Now, we did see the weeklies. If you look at this chart here, the weeklies did briefly go to zero. So you had zero spread between Bitcoin and Ethereum 1 week vol. And that's because Bitcoin exploded, right? And it was leading the charge. And at first, Ethereum wasn't really participating and going along with it. So you saw this drop in that spread because if you look at the realized, both the 10-day and the 30-day realized is now sub 10, which are these dotted lines here. So that's like saying it's not necessarily a no-brainer that you want to own Ethereum 10, 12 vols over if Bitcoin's actually the one who's leading the movement right now. That's not persisted yet. We don't know if that's going to be the case going forward, but it's made people think a little bit about whether or not they want to pile into that spread. And that's why that spread is still kind of where it is. It did bounce off those lower levels. It got close to 5. And certainly if you're looking at back-end stuff, June onwards, I think 5 is a bit of a no-brainer to own, whereas in the super short-dated stuff, anything can happen. So you need to be a bit more wary about whether you're going to get into the spread in really short-dated expiries, because it really is all about the gamma and all about the short-term realized. But I would say longer-term, June out, if that thing gets anywhere near 5, you generally want to buy it, but it didn't stay there for very long. It was kind of like you blink and you miss it this time around. So it wasn't there long enough to really get a material amount on or even talk about it, right? Because it was like I said, it was very briefly over the weekend. Okay. Now with curves this flat, as we said, I do think that front end's going to likely come under pressure if we kind of don't continue to realize a high level of realized vol, because that's just the way curves tend to work. It's quite reflexive. So don't be surprised by the end of the week if we have managed to just sit at these resistance levels without doing too much, then that front end could easily get hit by about 10 or more vols into the weekend, right? As we typically see when curves go flat. And in terms of catalyst this week, Bank of Japan is your main macro catalyst. I don't think that's really going to specifically move crypto, but you never know what Bank of Japan do. It could have a material impact on the dollar, and therefore that could filter through to crypto markets as well. Okay, and then let's move on to SKEW. Decent move down in SKEW. Obviously, it's been grinding lower as markets were realizing nothing as people look for risk premium. But now it's being driven not by people selling puts, but more being driven by a lot of call option buying and call option demand, basically, right? So you saw this collapse here in 1 month and a collapse in 3 months. Bitcoin leading the charge. So Bitcoin SKEW flattening more than, not even flattening, going the other way. So it's gone in for calls. So Ethereum SKEW coming in pretty flat right now in 3 month. But it's for calls in Bitcoin. And then both of them are for calls now in the 1 month, basically, right? So completely flipping round, and the premium now is calls above puts. And we haven't really seen that. We haven't seen that since November last year. And even in November last year, it did not last very long, right? So we haven't seen it persist like that for quite some time. Okay, so it'll be interesting to see how long the SKEW can be this way. And we're going to need to really see some sustained upside movement for the SKEW to stay this way. Okay, but the change in sentiment, which is apparent in this vol surface, shows you that call buying has returned. It's returned in a big way as funds had dry powder to put to work, and they were waiting for a proper turn in markets before deploying that capital. So the macro environment is slightly improved at the margin. Net liquidity looks better in the next sort of 3 to 6 months potentially. And that's led people to kind of have a go at crypto, because that's where the value potentially was, because it was so beaten up, basically, right? So we do think the short-term call premium can persist absent any more scandals in the space, but we do think longer term the macro cycle probably hasn't bottomed fully, and we do think a put premium in the longer maturities makes sense. It might go away for a while, but I would suspect put premium to be coming back heading into sort of latest middle of this year, as the macro cycle and the macro weakness kind of kicks back in again, basically, right? We're thinking if we do get a period of Goldilocks, it's probably going to be fairly short-lived or transitory, if you want to say. But I don't think we're quite done yet with the sell-off. And even on the charts, right, until Bitcoin materially breaks above 25.5, 26K, then this could well just be a larger degree fourth wave ABC correction in a bear market that's not complete yet. And that's probably the scenario that I would favor right now. Okay, the dashboards you can look at in your own time. We pretty much covered all the stuff that's going on there. I mean, just you can just see some big. If you look at the historic moves, the daily moves, stringing together 5%, 6%, 5% on the trot, basically, right? That's some pretty aggressive momentum to the upside, basically exhibited by Bitcoin, which we haven't seen in a long time. Now, if we look at option flows, what are we seeing there? Obviously, a big jump in option volumes triggered by this upside break, close to $4 billion trading on Bitcoin, 80% dominated by calls. Initially, it was Jan call buying. We saw strikes 18K to 20K being bought to play this. Then once spot did move and it broke 20K, those calls got rolled. Some of them got rolled out to higher strikes in that 22, 23K area. Some of them got rolled. The larger clips got rolled out to February. So the February 22 to 24K area is what it was all rolled into. That makes sense, right? You bought a load of cheap calls. They've blown up, made a load of money. You want to take some profit, roll it out, give yourself more time for the thing to continue to build momentum. And then they also, as the vols were so well bid, whoever rolled into those February calls also took the opportunity to sell some March 30K calls to get some premium back and get the Vega risk down, right? Because when you buy volatility when it's cheap and it works and then the vol pops, there's a risk that vols will come back down as the speed of the move kind of calms down. So by selling those upside in March, whoever's bought all these Februaries is kind of mitigating some of their Vega risk to kind of manage that position. And if vols do come down over the next few weeks, they may then buy those 30K strikes back in March to then just be left with the February calls naked. That's certainly how I would do it, basically, right? And then we also saw some bullish risk reversals being traded, selling strikes in the 17 to 19K area in Feb and March to be buying calls in the kind of 23 to 26K area, basically, right? So bullish risk reversals there. People buying calls, but not wanting to buy a load of vol, so they're comfortable selling puts against them because they think that downside risk has subsided somewhat. Okay. Moving on to Ethereum flows, we can see Not quite as explosive as Bitcoin, but still call dominated, but about half the size in terms of dollar notional. Large put strip was also bought, so a little bit of downside flow, unlike Bitcoin, which is all bullish flow pretty much. A put strip is just where you buy a load of puts of different strikes. So instead of just buying all of it on one strike, they bought the 1250, the 1300, and the 1350 puts, buying every leg in about 10K options each. And they spent about $1.4 million of premium. And that was before CPI came out. So that was a pretty hefty size hedge going up in Ethereum. Clearly it didn't work because everything's rallied. So they lost a lot of that premium. But, you've got to think that was probably against some kind of long risk asset position. Otherwise, you probably wouldn't be spending such a large amount of premium, basically. Okay. Jan calls were also active. You see all the pink bars there, in the 14 to 16 strike area. We saw a February call spread go up in good size. That was the 1700, 1800 call spread. And then the March, there's some call spreads trading in March, and June outright calls being bought on the 2000 and the 2500. So decent amount of flow on the upside in ETH as well, and kind of spread all across the place, and also a lot of call spreads trading rather than just outright calls, because that vol does generally trade a good 10 points higher. Okay, gamma positioning wise, that's something we look at nowadays as well. Last week, we highlighted dealers were long in the front expiries. So last Friday and the 20th against being short the 27th of Jan. So this led to a bit of a gamma squeeze post expiry as dealers long calls rolled off, and then more call buying flow came in and made those dealers chase the rally because they didn't really have the inventory to supply it. Okay, BTC positioning is back to more neutral here as profit was taken on some of those January calls, and that kind of gives the street back some gamma. So you can see this blue line here, it did dip down to fairly negative territory and it's recovered closer to flat, which means that dealers should be a bit more neutral gamma here, which might then mean that the spot doesn't actually need to move quite as violently in the near term. Okay, Ethereum dealer gamma also got taken flat. It was generally quite long. Ethereum was coming in a bit longer than Bitcoin, as we flagged last week. But that explains why the moves were a bit less aggressive, in Ethereum as we started to move higher, because dealers weren't caught quite as short and didn't really need to scramble quite as badly. Okay, that does still look to be quite positive. It got to flat, it's bounced from there. It does look a little bit positive right now because there's obviously been some cool selling coming back in. So dealers seem to be pretty comfortable here. Again, implies that maybe we're not going to break so violently over the next week or two if dealers' inventory is fairly in check, let's say. Okay, that's what I'm seeing in positioning. Now, what did I do this week? Thanks a lot. Catch you all next time. Bye.